Hi, let me ask you a simple question. If you open your investment app today and saw that the Nigerian stock market had fallen for 5 straight trading sessions, will you panic? Will you start selling everything, or will you just close the app and pretend you never saw anything? Because honestly, I know some people will choose option number three. But let's talk about what actually happened in the Nigerian stock market on Monday, August 17, 2026. Because there are some very interesting things hiding inside these numbers. And don't worry, I'm not going to bombard you with complicated financial grammar. Let's break it down together. Welcome to Malab TV, where we talk about money, business, market, and economy without making you feel like you've accidentally entered an economics examination or class. So the Nigerian stock market fell again. So according to the market figure for Monday, August 17, the NXG All Share Index closed at 242,454.66. So there was a decline of about 0.07% from the previous session. Somebody might look at that number and say, is that even a fall? Yes, it is so. But here's where it gets more interesting. This was reportedly the 5th consecutive trading session in which the Nigerian equity market extended its bearish run. And that bearish means when something comes down. So, and the market capitalization fell from about 156.62 trillion to 156.52 trillion. That is approximately 106.24 billion wiped off the market capitalization in that session. Now, before somebody starts shouting about 106 billion, everybody has lost 106 billion. Hold on, that is not it. That is not exactly what that means. What it means is that market capitalization is basically the total market value assigned to the share of companies listed on the exchange. So when prices move down, the overall market value can also fall. It doesn't mean maybe the 106 billion in cash physically disappear from people's bank or maybe from houses or anything. Nobody entered the stock exchange with a giant vacuum cleaner and suck up maybe the model. No. It is about the change in the market value of the listed shares, and that is an important distinction. But here is where it gets interesting. Now look at the pictures above, because why the overall market was falling. Not every stock was falling. In fact, some stocks had a pretty good day, like the Trans Expire gained around maybe 9.86, the Avocap gained 9.72%, the Thomas WY gained 9.09%, the Down Sugar, which is Dangote Sugar, gained 8.60%. So imagine you are looking at the headline that maybe Nigeria stock falling for 5 straight sessions. You might think every stock in Nigeria is running away from the market. No, that is not it. Some companies were actually gaining, and that is one of the first things you need to understand about the stock market. So the market can go down while some individual stocks are going up. So it used to apply that, but let me tell you the reason for that. Because all the share index is measuring the broader market. It is saying that like every single company moved in exact the same direction. You understand? Like think about it like football. If your team loses 3-1, maybe they beat you 3-1, that doesn't mean every player on your own team played badly. Some player might have had fantastic game, some player might have made some terrible mistake, but the final result is one thing, that you are beating 3-1. But the individual performance is another thing entirely. So that is why we used to have ratings. Even if they beat you, you see some players will still have good ratings. So the stock market works in that way too, in similar way. So don't just see markets down and assume every stock is down. No, it doesn't work like that. And then you have those losers. We've already talked about those top gainers. Now let's talk about those that are top losers. Now let's go to the other side. Some stock had a very painful Monday. So some drop around 9.91%. The FT Jinshaw, they dropped about 9.89. UPL dropped, then dropped, even Tantalizer dropped. So yes, where things get really interesting. If you look at the FT Jinshaw, according to this market snapshot, it fell about 10% in one day. You see that and immediately think, this stock is finished. No. But then look at 1 year change. If you look at the picture very well, you will see 1 year change. The same snapshot shows that 1085% increase over 1 year. Now, the thing is that I am not telling you to buy any stock, and I'm not telling you to sell any stock. So any decision you make is on your own. But before you make your decision, kindly look at the context in it. Like kindly look at their market very well. Look at each year gap. Look at their index, maybe the last few months, you understand, and everything like that before you make your decision. Because if you look at maybe today's number, you can probably get a completely different picture from looking at the long-term movement. You understand? What they have passed through last year may be different from what they are passing through this year. And simply because yesterday market was down doesn't mean today or tomorrow's market will be down. So, and the stock can be fluctuating on and off all the time. So, as an investor, what you should actually do as an investor is that when you open an investment app, you can see something up to like 10% and suddenly think, this one is moving, let me enter. My bro, moving where? Nobody has told you to move yet. Kindly look at everything, look at their valuation, look at their risk, look at their broader market, that is all what they have already passed through in the last few months. Try to like check everything. If you look at those people that are betting, before they bet on things, they will have tried to reason about what they played last match, or maybe against that specific team they want to play right now. How many times have they played together in the last 5 games? What did they play? All those kind of things. So that's how market works. You have to look at everything before you move. Now, so about the 5-day decline, we should not be probably, or we should be worried because the market has now fallen for 5 consecutive sessions. Well, it is certainly something worth paying attention to, but 5 negative sessions alone don't tell us everything about where the market is going next. Markets move every day, sometimes because of company specific news, sometimes because of maybe investors are taking profits, and sometimes because of economic expectation. Sometimes it may even be because of interest rate, inflation, exchange rate, any expectation, global market, or investor sentiments. So the market just does what markets do, as we know. So it moves, and that is what you should build your entire investment decision around, one day movement. The important question isn't did the market fall today. The better question is why did it fall, and does that reason change the long-term outlook for the investment I am holding? So I think that is a much better question. So now let's talk about something completely different. Now, while we are talking about things that can affect businesses and our everyday digital lives, there's another story I came across that I think people should pay attention to. The Nigeria's National Information Technology Development Agency, NITDA, reportedly warned Zoom users about a critical evaluation or vulnerability that could potentially allow attackers to take over accounts without valid credentials. So the vulnerability was defined in the report. Now you might be thinking, Malab, we were talking about stock market. How did we suddenly reach Zoom? This is very simple, because money isn't only about stocks and currency anymore. Your digital security can also become a business and financial issue. Think about how many people use Zoom for work meetings, clients, business discussion, documents, company information. Maybe you are running a business and your Zoom account is connected to other services or contains sensitive information. So when there is a serious security warning, it is not something you should just scroll past because you think it is only Zoom. Don't ignore security message. The lesson here is simple. Whenever a trusted technology company or a government cyber security agency tells users to update software because of a serious vulnerability, please kindly update it. Don't wait until something happens, because cybersecurity is one of those things people don't appreciate until there is a problem. It is like locking your house. You don't lock your door because you know someone is definitely coming to rob you. You lock it because you don't know. Same thing with your digital account. Don't wait for the thief to knock before you remember where you keep the padlock. So back to the stock markets, because let's continue. Let's come back to our main story, because I want you to notice something from the market. On Monday, we had 19 stocks gaining while 36 stocks declined. So there was clearly more negative movement than positive movement among the stocks shown in that market summary, as you can see. But again, that doesn't mean every investor lost money. Someone holding one of the gaining stocks could add a positive day. Someone holding one of the declining stocks could have had a negative day. Someone sitting in cash didn't experience the same stock price movement, and someone invested for the long term may view a single trading session fairly differently from someone who is actively trading. So this is why headlines can sometimes make the market look more frightening than it actually is. The headline gives you the event. You need what? Context. So my own final message to you is that, number one, the Nigerian stock market has had 5 consecutive bearish sessions according to the report you are looking at. Number two, a market decline doesn't mean every individual stock is falling. We saw some stock gaining about 10%, while others fell almost about 10%. And the number 3 is, don't judge an investment using one day's performance alone. A stock can fall today and still have had a very different performance over a long period. And number 14 is that don't ignore digital security warning. So thank you very much for watching this YouTube video. Thank you.